GameStop is an American, well, what they used to be, what they still kind of are, is a brick and mortar games.
Wait, I just realized you're looking at a screen, right?
Yes.
Look at the camera. Because your eyes are like over there. I was looking at the thing. I was like, oh wait a second, this looks weird.
Yeah.
Okay, great.
Okay,
So stop with it. Hey guys, welcome to the show. Shadow Chat back here just for a quick video. We're not ready to come back fully yet. We'll explain that at the end of this video. But first, we've got Johannes here coming back. We're back in the Playtech studio, and we're just gonna talk to you. And Johannes is gonna tell you the whole story so far about GME, Wallstreetbets, all that kind of stuff, because that's impacting a lot of people, and it's still ongoing. The saga hasn't finished just yet. But tell us about it, Johannes.
Cool, man.
How did it start and where's it going?
Okay, so for those of you who don't know what GameStop is a brick and mortar games retailer based in America. They've been around for decades now. It's kind of the American equivalent to EB Games. They do exactly what they do, basically. And they've been in a rough patch lately because of the move towards more digital content for gaming, right? You can switch on your PS4 and buy a game straight away, as opposed to walk to your nearest GameStop and get a physical disc. That's the thing that they've been struggling with. They've closed hundreds of stores all across America to try and fix that. Now, this has led to a few sort of anomalies happening in the market, the stock markets. Now, before I get into what those anomalies are, I'm going to give a brief sort of overview of how the stock markets work. Myself included, as well as Ian, we really haven't been into it until last week for you?
And 1 week ago.
Me, literally 4 to 5 weeks, right? In the past 4 to 5 weeks, I've learned more about the stock markets than what I probably would have learned in 2 years of going to university. That's how bloody into it I've been, right? So, stock markets is essentially a game of tug of war, right? It's like a red versus blue, red versus green, left versus right kind of situation, right? You either go into the stock markets with your money, you put it into a company that you think is going to skyrocket in the future, and you make the profit of what you put in at the beginning versus what it's worth later on in the future. That's what's called a long play, and that's what you see when the graph goes green, right?
Nokia BlackBerry.
There you go, GME still, woo. The idea of long plays is that, this is what most people would go into the stock market doing, is they invest their trust and money into a company that they think is going to do well. The opposite also is true, and this game is called shorting, right? Opposite of long, short. And the way this occurs is, first of all, shorters are normally done by institutions, hedge funds, fund managers, big kind of companies like that. Individuals, especially first-time investors, don't have access to shorting capabilities.
Right? You just require more volume, and I don't think the average man is able to buy a million.
You require
stock.
more capital, more volume, more cash liquidity. Like, you're playing in the hundreds of thousands and millions of dollars when you're shorting something. Right? So when you're shorting something, what you're essentially doing is you're borrowing a whole buttload of shares from a lender. Now, there's like special lender companies that lend out these shares. You borrow these shares for free at interest. You sell them at, say, market rate. People will buy them. Those people will start to realize, hey, well, the value of these stocks are going down, so I'm going to sell them at, without incurring too much loss. You swoop in, buy back those shares at a lower price. You pocket the difference between what you sold it at the, at the market rate at the start versus what you bought it back at, right? So depending on how much the price fell, that's how much profit you made. So your best interest is to see a company go down in stock, like it go down in value. It is essentially the red of the graph that you see, right? So once you've bought back these shares as a shorter, you give it back to the lender plus any interest you might have incurred during that time. Now, interest is actually paid daily as a shorter because it's like a very kind of fast-paced day-by-day, week-by-week game, right? Short plays are extremely risky in the sense that there is no potential cap of loss.
You could be in debt millions and infinite amount of dollars.
The price can instead of going down, go up, in which case you'll be buying at a higher price than what you sold it as, so you'll end up losing money. But
you're essentially creating your debt and your own losses at that point.
Yeah, and you have to, whatever you do, you have to buy back these shares because you've borrowed them at interest, so you gotta keep paying interest until you give them back at some point. So, infinite risk, right, versus limited risk that a long player would have, right? So that's the two difference between long and short plays. Now the difference between, well, the unique situation of what GameStop has happened is the available shares in the market, well, over 100% of what's called the free floating shares, or what's available at the market, is shorted. So if you're an investor and you decide to buy some GME shares, you're going to be buying straight from the hands of these shorters, not from any other retail investors, but exclusively from these shorters, because the entire stock of those warehouse of those shares are owned by shorters. Mm-hmm. So whatever happens, if you keep holding on to those shares and enough of you buy into them, the price is going to go up and up and up and up and up to the point where these shorters are pissing their pants, not being able to pay, not being able to pay the interest, give back the shares that they originally sold, because the prices are now $400 per share instead of $4 at what they sold it as.
And they have millions of those. So take that $396 difference and multiply that by 1 million.
Right. That is what happened in the past couple of weeks. The price of GME shot up from about $20, $30
all the way to the moon
to about $350 and above, right? Now, there is not enough market liquidity for any company to cover these short stocks. Like, no matter how rich you are, no matter how like Jeff Bezos you are, there is not enough money to buy back these shares at $350 a share to pay back your lenders. Not going to happen. So of course they played dirty. They played things by off the books. They contacted media. They spread misinformation and lies about what the actual situation is. They're blaming, Joe investors and ruining the lives of mom
everyday
and pop
people.
investors,
everyday people,
which is not true. In fact, hedge funds that actually do practice in risky short selling should be the ones to blame for any loss incurred by original investors. It's literally taking their money and going to the casinos and hoping for a big payout. It's ridiculous. But the biggest FU to the retail investors, us, has come in the form of shutting down the buying capability of GameStop and a few other shares. Now, what that does is it creates like a downward vacuum where you can't actually, as a everyday investor, recover from. Because if you sell a share of GameStop and you're like, okay, cool, I'm just going to sell this for now temporarily. I'll buy it later when it dips down a bit. Guess what? You can't.
No, you can't.
You literally can't, because they've turned off the capability of buying. Now, what's even more scummier is that apparently for specific hedge fund companies, they haven't turned off that capability. They have a back end channel by which they can buy en masse GameStop shares whilst everyone else was turned off, because we have to go through certain, licensed brokers like Robinhood, Hatch, Sharesies, whatever. So this whole thing was rigged to fail for us right from the start, until they saw, okay, this is actually like unrecoverable. We're going to start screwing you guys over in ways you've never ever seen before. And the market has never seen this kind of play before, because
the Illuminati had been hiding this entire time, but this one day a bunch of memers came out. Nope, like that all ended.
Absolutely. And the thing is, the most, like, I would say the most feasible, like the most reasonable response to controlling what they call market volatility, right? Because the biggest reason for them doing this was to control the market volatility. It should have been turn off selling and turn off buying, right? Both sides just cannot buy or sell. Let clearing houses get enough liquidity for them to be able to transfer the money back and forth, build up their net sort of like capital worth over a couple of days, and then turn those capabilities back on, right? But of course they're not going to do that, because then they would be playing by the rules.
So who ordered the I suppose ordered this whole
so there's a
stoppage,
right? So as a retail investor, you buy and sell shares through brokers. There's hundreds and thousands of brokers out there in the world, by the way, all do sort of the similar thing of giving you access to the market. Now, these brokers have to liaise with the higher ups called, they're essentially the ones that set the rules. So these guys specifically are called DTCC, which is, I think, distributed. It is DTCC. It is Depository Trust and Clearing Corporation. So essentially what they do is, whenever two sides make a buy or sell, one side has to provide collateral, because that money and those shares do not transfer hands instantly. If anything, it takes about 2 working days, right?
Right.
But it appears in your account instantly. So what is happening there is essentially whatever is appearing in your account instantly is a placeholder, or what's called a collateral, right? And normally most clearing houses require a 3% cash collateral on each sale or buy from that broker firm.
Yep.
Right? So the broker firm has to pay 3% of whatever that sale or buy was to the clearinghouse, for the clearinghouse to transfer the rest of the shares and the funds to the other side. It takes 2 working days.
Right.
Of course, for GME, when they realize, oh shit, this is happening, they increase that collateral requirement to 100%. So the brokerage firms have to pay the entire cost of the sale amount or the buy amount to the clearinghouse, and have to wait 2 working days for that to be cleared and passed on to the other side.
Essentially, like Sharesies would have to pay the same amount you're paying to buy that, and
exactly,
then they get nothing out of it, and they essentially just lose to allow you to trade. So which indirectly forces them to close, because then they would just start incurring a mass amount of debt. So
absolutely.
So what happened after?
So what happened after? When you shut off the ability to buy, right, especially for retail investors, you're shutting off the requirement for brokerage firms to give this collateral
Right.
to the clearinghouses. And so the clearinghouses don't have that much, they all they have to do is just cater to the needs of the hedge funds and to make sure that they don't go under. Right? Because all they have to do is buy back whatever's being sold by the panic sellers on our end.
Right. So
it's really, really cooked.
yeah, it is stuffed. And I mean, we're suffering from that because now our stocks in GME and our shares in GME and stuff like Nokia, BlackBerry's doing fine actually. Nokia, GME, AMC, some people, all these other brands that either people socially invested into, wanted to save, or just I suppose wanted to jump on board with the hype train. Guilty as charged. But yep, like AMC and GME are like nowhere near where we bought them.
Oh yeah,
Right.
and they
And-
won't. I don't think they will ever be anywhere near what we bought it as.
It's sad to say I think it might be done, but I'm hoping it at least goes.
That's the thing. It's never done unless you've pulled out.
Yeah. So hold on to dear life is the term people often use, and I know that from trading Bitcoin because I do crypto, but and we'll talk about that at the end of just like real soon. But like that's essentially the strategy, right? Like you just like GME's not going anywhere anytime soon. You're just hold on to dear life.
The only
No
way,
point selling for a loss.
The only way you're gonna lose money is if you sell at a loss.
Yeah.
That's
Until
like,
then, you're investing.
it might be 30 years down the line for which you actually start to
But
see
you're
like
90.
300%.
Your $100 that you bought at might be 110, and you'll make a $10 profit.
Yes.
And at least you didn't make
At
a
least
loss.
you're in the green.
At least you're in the green.
Look, as funny as it all is, at the end of the day, a lot of this sort of shenanigan is being blamed on the retail investors. They're taking a very patronizing standpoint to kind of put us in our place.
Okay, can you explain the term retail investors to the
Sorry,
average?
retail investors are basically you and me.
Yeah.
Mum and dad investors that have 9 to 5 in anything other than the finance sector. That literally, most of the time they'll put their savings in a fund manager or some kind of, we're lucky we've got KiwiSaver here, but like in America, or 401k, things like that. That is what's called a retail investor. A retail investor puts money away, not fully knowing where they put that away in, right? So that's us. And normally, we're the ones that get screwed all the time, every time, because that's just the way of the game.
Yep. They present you an opportunity. We have nothing better to do.
Yeah.
No one's the wiser.
The allure of stability and sort of safety and future-proofing your life is just too sweet for anyone to pass up.
Especially when you live well, maybe not live in, but you come from a background where you have had nothing. You've had very meager and meek beginnings, such as myself. Like the idea of turning your $10 into $100, and then like that's very alluring, because then it's minimal effort for maximum gain, or free gains.
Passive
really.
income.
So having said that, the saga is still ongoing.
Oh yeah.
It's and so just to explain to people what that means, what's actually happening and what's unfolding, and what is it people are waiting for?
People are waiting for what is going to happen with the SEC, the Securities Economics Committee, I think. Basically, they're like the fund police in America. What they're going to uncover in this whole shenanigan, they're going to present it in court. They're going to have people testifying in court on hopefully the market manipulation of the hedge funders. But at this point, no one knows what's going to happen on that end. On the GameStop end, GameStop has already announced they're hiring 3 CTOs, CFOs from Walmart, Amazon, and all those other places. The thing is, GameStop is going to go up from this. It is in their best interest. They're going to be in a win-win situation because of all this. And so that's, for the retail investors, the best thing we can do is just to hold on and see what happens to GameStop, see what happens in the next year or two. at the moment, prices are sitting, stagnating around 60 to 65, 68, maybe breaking 90 overnight. But it's not going to go up over 100 anytime soon. And if anything, as long as we still keep holding, it's not going to go down, to the $4 that it once was as well, because a lot of the shorters are still shorting it. It's not quite at 100%. It's probably just below that. But that just means, if you're still in the game, you're still in the game.
Yep.
Won't stop. Yeah.
But I suppose that's the story so far with.
There's going to be a movie made.
Oh, I'm not even surprised. Is it funded by Lil Moon Lambo?
I don't know, man. I don't know, but Netflix did buy the rights, I think it was.
Well, there you go. I mean, this could be Wolf of Wall Street too. It could.
I feel like it's going to be more The Big Short type of thing with a lot of explanation, like finance explanations. And,
yeah.
Because
I mean, it could be a little bit of both.
maybe.
Right. Having said that, that's the story, right? There's going to be a movie. There's going to be a whole bunch of things that's happening. And it's still ongoing. Honestly, if you're not in the game right now, consult someone like a friend or someone learned in this field and see what they might advise you. Seek professional advice at this point. Don't take it just from us. This is our opinion.
No shit.
This is just two simple guys that just got into this recently, learning from our friends, and here at Shadow Chat, I suppose a lot of people might be wondering like why we're doing this, because we're not financial people, like financial advisors or whatever. But here at Shadow Chat, it's sort of like whatever we do on Shadow Chat for Shadownet, like this podcast, this show, whatever we do as desk personalities, everything here is relatable to us. And this is, I suppose, this is where our branding comes in, because we're just a bunch of regular gamers getting older, right? We're growing up, and these are the things that we're going through. And surely there's someone else that's exactly like us, that's started with a Game Boy, that started with the PlayStation, that's growing up, and now we're watching this GameStop thing, and these are brands, GameStop, Nokia, BlackBerry, these are brands that we grew up with.
Shit, yeah.
And we see people like these hedge fund guys short selling them, and like messing with these iconic brands that we're so close to. I suppose it becomes personal for a lot of us, and that's where all these Redditors came from, and just being like, you know what, no, like it got real personal with them. For us, it's sort of like us seeing it like, you know what, this is a good idea, or like, okay, I can see the benefit in stock trading because of this as a result of what's happening.
For me, I got in specifically because I wanted to, I really believed in the idea of wealth redistribution. I didn't think that it was possible for, wealth redistribution is not about increasing minimum wage or increasing taxes of the 1%. Doesn't work.
Creating opportunities.
It'll never work. What will work is when the average person, myself, Ian, whoever, mom and pop investors, jump into the game and start investing and start learning about how these hedge funders work their game. Like, that's the only way. That's the only way we can take, their private planes and, use it to pay our rent, to pay our mortgages, pay our kids' tuitions. It's the only way. There is no other way. I guarantee you. Guarantee.
Yeah. I mean, if you increase the minimum wage, prices go up anyway, so.
Doesn't fucking matter.
Yeah, exactly. It doesn't matter. Thank you guys for watching today's video. Honestly, it's crazy that to believe that these are the times we're living in. Today's episode was not financial advice. It is not us telling you to buy into something. We are simply reporting the news. We're reporting our situations, our perspectives, and what we are learning from our friends, our family, and from the online masses that are rallying. So if anything, make sure that you are doing your own research as well before you're getting into any of these kind of things, whether it's crypto, whether it's stocks. make sure you are savvy and you seek professional advice before you do anything.
Seek multiple professional advice.
Multiple
Don't just
professional
go
advice.
off with one. Compare the differences, and then compare it with your own research.
Absolutely, and make sure that you are making the most sound decisions possible before you make any decisions. Having said that, it is a crazy time to be alive. Crypto's booming, stocks are going all over the show, and like Johannes has said at multiple times in this video, I mean, as he said multiple times in this video, wealth redistribution is at an all-time high, and it is more available than ever.
Oh, it's not
well,
all-time high just yet. We want to make it an all-time high.
Well, it's more. What I'm trying to say is it's more available. It's more available. It's more accessible in our day and age.
It's just up to the people to actually use it.
Yeah, absolutely. And that makes this the best time to be alive. Really, like
because let's face it, we millennials we've got it rough.
Yeah.
Like you compare our positions, how many lack of houses we have compared to our parents back when they were our age, right?
Well,
it's kind of like if you go by that metric, it's like shit, we're pretty bad.
Yeah, like in retrospect, there are things that I think millennials have that that no one else ever had before or had access to. It's just a redistribution of it, I suppose, and a rebalancing that kind of just happened or occurred naturally over time as society changed. Having said that, we'll see you guys soon. In regards to Shadownet, we are building a website that will feature content, articles, written stuff, really showcase the more intellectual side of what we're actually trying to do here. And that's going to allow us to create more meaningful stuff, meaningful content, and I suppose make our time in the studio more meaningful and more purposeful. Johannes and I will be creating content, Aiden as well, and we'll be writing, and we'll be using this podcast in this podcast room here at Playtech to really create these videos to highlight the key important points, and I suppose to make it easier for you to learn some of these things, because some people just don't want to read. Some people would rather listen to a video or watch a video or whatever, instead. And so some people would also like to read as opposed to listening to our voices, and it's just the way it is. But thank you guys for watching. We'll see you guys in the next video. Thank you to our sponsors. Thank you to MSI. Thank you to Playtech. And thank you to everybody that's keeping up with us. Follow us on our social media to find out about all the exciting news that we're going to release in the next few weeks. We have a whole bunch of things we want to show you guys, and it's just a matter of time until we release that. So thank you so much for joining us. We'll see you guys in the next video. Johannes, did you have anything to say before we shoot off?
Remember, kids, can't stop, won't stop, Gamestop. Power of the players.
That was good. I like that. That was good.